Yes, good afternoon, good morning, or whichever time you're watching this video clip. Welcome to another session of Principles of Accounts. In this session, we'll look at the returns journals, outwards and inwards. That is, returns inwards journals and returns outwards journals. Please do watch and enjoy this presentation. At the end of this video presentation, students will be able to enter up the balances, enter up the returns inwards journal. Returns inwards and returns outwards journals from source documents, post the journal entries to the sales and purchases ledgers respectively. Now we look at returns journals. In business, we'll agree to customers returning goods to us. This might be for reasons such as goods are of wrong type, goods are faulty, etc. The question is, what document would we create to record such an occurrence, and what would we do with this document? If you look at the board, you will see something called returns inwards and credit notes. Means you would create a credit note which will be sent to the customer showing the amount of allowance given by us for the returns of these faulty goods. So what this is saying basically, my friends, is that as a businessman, you are the business owner, you will create a credit note, you will then send the credit note to the customer, telling the customer that these amount of that they are allowed to return these goods, and they will be reimbursed whatsoever, whether they'll be refunded or they'll be given as a replacement product for the good that was found to be faulty or the good that has to be replaced. So why do they call it a credit note?
Miss, they call it a credit note because the customer's account will be credited with the amount of the allowance to show the reduction in the amount owed.
You see, what this is basically saying, that it is called a credit note because here in this instance the customer is what? Losing goods. So as a businessman, when you're recording this under the customer's account, you will make a what? A credit entry under the customer's account. On the other hand, you'll make a debit entry under the returns inwards account. I repeat, you make a credit entry under the customer's account under the what? Sales ledger, because customers' personal accounts are found under the sales ledger. So under the sales ledger, in that particular customer's account, you make a credit entry. However, in the general ledger, you make a debit entry under the returns inwards account. As I said before, credit notes are source documents for entering up the returns inwards journal. Credit notes are listed in a returns inwards journal. This information is then used for the posting of items. Now, items are posted as follows. It says ledger, credit the amount of credit notes one by one to the accounts of the customers in the sales ledger. That means you are going to place returns inwards under the customer's account in the sales ledger, and you write the amount that is on the credit note that is being returned. And the general ledger now, at the end of the period, the total of the returns inwards journal is posted to the debit of the returns inwards account. I repeat, at the end of the period, just like with purchases account, the total of purchases account is normally posted to the total of the purchases journal is normally posted to the purchase account under the general ledger. In this case, the total of the returns inwards journal is posted to the debit of the returns inwards account. Right? Why would you do this? This is done because returns inwards, as a business, you are, in this case, you are getting goods from the customers, getting back goods from the customers. So therefore your stocks will naturally increase. So therefore you have a debit entry because you are what, receiving goods from your customers. So once you're receiving, you make a debit entry. You're losing or you're sending out, make a credit entry. That is a rule, golden rule in accounts. Now watch these video clippings of how the returns journal works, returns inwards journal works and posting works as it relates to returns inwards. Now we're going to look at some other transactions as it relates to returns inwards and returns outwards journal. Transaction here says you have to enter up the returns inwards and the returns outwards journals from the following details, then post the items to the relevant accounts in the sales ledger and the purchase ledger. The totals of the journals are then to be post transferred to the accounts in the general ledger. On May 11, goods returned by us to P. Potter, $12, B. Spencer, $20. At this time I'll be asking you to pause the video, write down this transaction, write down this first part of it. You are to enter up the returns inwards and returns outwards journals from the following details, then to post the items to the relevant accounts in the sales ledger and the purchase ledger. The totals of the journals are then to be transferred to the accounts in the general ledger. As you go along, write it down, pause the video and write it down as we go along. May 11, goods returned by us to P. Potter, $12, B. Spencer, $22. May 14, goods returned by us. Goods returned by us to T. Thompson, $5, K. Barton, $11, K. Kelly, $14. May 20, goods returned to us by B. Spencer, $14. May 28, goods returned to us by N. Mendez. So first things first. First transaction says what? Goods returned by us to P. Potter and B. Spencer. The question is, what kind of transaction is this? Is it a returns in or returns out? It's a goods returned by us too. That means we are the businessman and we are returning goods to our supplier, who is P. Potter and B. Spencer. So therefore this transaction would go into the what? Therefore in this case we would make a record in the what? Returns outwards journal, because this is goods returned by us. That means we are returning goods out of the company. This is returns outwards. So we're going to have returns outwards journal right here. So you're going to have returns outwards. Returns outwards. We call it journal. We don't have any page number. We're going to write it down. So good returned by us. This is the year again. The year is what? 2000. We're going to assume that the year is 2011. We have 2011, and the date is when? May 11. We're going to have May 11. First person is who? Mr. P. Potter. We're going to have P. Potter, and then you're going to have a column, amount in a column, and amount column. Questions, what is the amount? Oh, 12, right? The amount is 12. You're going to have May 11 again. B. Spencer. And the amount is what? The amount is $14. is $22. So now we go to the other transaction now. May 14 goes returned by us to T. Thompson, K. Barton, and K. Kelly. As usual, this one is what? Returns outwards. So we're going to post these transactions to return the returns outwards journal. The first one is what? Write the date May 14. Write T. Thompson, and the amount is $5. Okay, Barton as well, $11. Say May 14. Okay, Kelly, $14. And I don't believe it. So therefore, next one, our transaction is goes returned to us by C. Spencer. Alright, our transaction says goods returned to us by C. Spencer. $14. This time when it says good return to who? To us, not by us to us. That means you're gonna have something called a returns inwards journal, because you're getting goods from our customers. And then there's a good return by us to us by who? C. Spencer. On what date? Date is what? May 20. $14. So the date is what? Let's say 2011, May 20. C. Spencer. The amount is what? Just again, friends. The amount is, I think the amount is what? $14. Then May, other one is what? May 28 will return to us by N. Mendes. Was returned to us by M. Mendes, May 28 by N. Mendes. So therefore this person is returning goods to who? To us. And the amount is 24. Now afterwards, realize that there is no transaction left, right? For neither of returns. Now we're going to balance off. Therefore, we put our single line and double line as usual. In this column now, we're going to write something like this. We're going to write, we are dealing with what? Returns auto journal now. Transferred to the returns outward account, and this will be going into the general ledger, right? These are all going into the what? Purchase ledger. And the amount for this is what? This amount, my friend, 64. So $64 will be going to the general ledger. Right. These are sales ledger. These will be going to the sales ledger. So these will be recorded in the personal account of the sales of the customer's personal account under the sales ledger. However, before we do that, we're going to have to do something else. It's transferred to the returns inwards account. Now we're going to do what? General ledger. Now we're going to write our double line and single line, double line, and the amount for that would be 38. So $38 would be going into the general ledger, my friends. That's it for returns journals. Now let's look at an example of how returns in our journal works. These documents, these things here. We're looking at returns in our journal first. These customers, the returns good to us. We now assume that credit notes are sent to them, and the credit notes are numbered here: 10335, 10336, 10337, 10338. The invoice number that were sent to them first. Same thing for the credit notes. So credit notes are sent to them. Alright. On the 8th of September, basically what is he saying? That the printer has returned goods to us, valuing $40. On the 17th of September, A. Brewster returns goods to us, valuing $120. On the 19th of September, C. Vickers returned goods to us, valuing $290. And on the 29th of September, M. Nelson returns goods to us, valuing $160. The total that will be transferred to the returns account in the general ledger is $610. So let's look at this now. How should we're not going to post to the sales ledger? So this is saying that this has been recorded on page 10 of the returns inwards journal. Now we're to record these on page 12 of the sales ledger. We're to record the Prendicas on page 12 of the sales ledger. So now we want to look at how we go about doing that. I already see the sales ledger right here at the top. So it is done. So now we write the Prendicas. What we're going to do, debit or credit. If you the video thus far says that we're going to do what? We're going to credit. We're going to credit the account of the customer in the sales ledger, and the Prendicas is the customer. So we're to write September 8th. No, for that we'll write 2005. September 8th. What to do right there? We'll write returns inwards here. So that's it for that one. So question is, what should go in the folder column, by the way? We're going to write what? PG. We're going to write RI10. That means page 10 of the returns inwards journal. Up here we're going to write P12 because it is page 12 of the sales ledger. And the amount is what? The amount is $40. That's how it is done. So the rest of them will be done in the same manner. Next one is A Brewster, page what? Page 58. This comes from this SL58, which is this is that page. It is page 58 of this of the sales ledger. So we are writing A Brewster's account on page 58 of the sales ledger. We're going to make our credit entry 2005 September 17. Returns inwards as usual. Is what? RI10. And the amount is what, friends? The amount is $120. Next person is who? The next person is Mr. C. Vickers. C. Vickers. P what? You should be able to guess this one. P what? P99. Based on what you have written down already, you should have paused. So P99, because what? Page 99 of the sales ledger, and the amount is what? 290. So when you place 290 on the amount column, before that, 2005 September what? 90, right? And then returns inwards. RI what? 10, right? It's RI 10. And the amount is $290. Next one is what? Mr. Who? M. Nelson, right? September 29, M. Nelson returned goods amounting to $160, and this was recorded on page. This would be recorded on page 122 of the sales ledger. It should be recorded on page 122 of the sales ledger. So we will make a record of that at this time, my friends. Who is it? Mr. M. Nelson. It is 2005 September what? September 29. Returns inwards. RI 10. So now, my friends, this is what happens here as it relates to posting from the returns inwards journal to the sales ledger. This is how the items are entered. Normally you would see something like sales over here, right? The same account that it would be entered in. For example, you had something that sold goods and credit to M. Nelson on September 28. You would have the date over here, sales, and then the amount, and then then you return goods to us on 29th September. You would have both of them in the same account. Now, it also said that transferred to returns inwards account, general ledger, page 114 of the general ledger, 610, which is the total of this right here. So here what is happening now? Returns inwards account. The rule said that you must what? At the end of the period, the total of the returns inwards journal is to be posted to the debit of the returns inwards account. So you're going to make a debit entry, which is over on the what? The right hand side. 2005 September what? 31st. Debit should be sorry, I wrote that one to be over this side. 2005 September 31st. The right returns for the month. We would write what? We would write RI10. I will write P114 because it is page 114 of the general ledger, and the amount would be $610 as the total of returns inwards journal. So there you have it, the returns inwards journal, my friends. That is the returns inwards journal, my friends. If you have learned a bit from this, stay tuned for the other video clip. I hope you would have viewed the clip about the returns inwards journal already and before now, and you'd have done you'd have written down your notes as you see that now we would look at something called returns outwards. In business, our suppliers will at times agree to goods bought previously being returned. That is, they'll agree for the return of goods to them. This time we're talking about what? Suppliers. The time before, and as returns inwards, we're talking about what? Customers. So when you see something called suppliers returning to suppliers, we are dealing with returns outwards. On the board you will see returns, journal returns outwards, and debit notes. The question is, what document would we create to record such an occurrence? What would we do with this document? Miss,
You would create debit note which will be sent to the supplier giving details of the goods and the reason for their return.
what this is basically saying, as a businessman, you will send a debit note to the supplier, explain to them the reason why you are returning these goods. So credit notes are sent to what? Customers, allowing for goods to be returned to us. While now we are seeing what a debit note is for. A debit note is sent to the supplier, giving them reasons why we, the business, are returning the goods to the supplier. It may be for a variety of reasons. As it relates to returns outwards journal now, the debit notes are listed in returns outwards journal. Please note, debit notes are listed in the returns outwards journal. Debit notes are source documents for entering up the returns outwards journal. Debit notes are source documents for entering up the returns outwards journal. Items are posted as follows: purchase ledger. We debit the amounts of debit notes one by one to the accounts of the suppliers in the purchase ledger. What this is basically saying is that we purchase goods from suppliers. So now, because we are returning these goods to suppliers in the accounts that we are recording, because remember that we are business people. When you're recording accounts, you're recording from the business perspective. We are the business. We are sending goods back to the what? Supplier. So therefore, we debit the supplier's account in the purchase ledger, because we purchased from them before. So now we are returning goods to them that were purchased from them before. Next thing, on the general ledger now, at the end of the period, the total returns outwards journal is posted to the credit of the returns outwards account. I repeat, at the end of the period, the total of the returns outwards journal is posted to the credit of the returns outwards account. So that's how this is done. Now watch these video clips, as these video clips will show you how we deal with the returns outwards journal and the purchase ledger, and how we post to the returns outwards account in the general ledger. Watch carefully. Let us now look at an example of how returns outwards journal works. I said before, the source document for returns outwards journal is the debit note, and we are dealing with page 7 of the returns outwards journal. Yes, so we're looking at the returns outwards journal. Sorry. Alright, based on this question, it would have said that we purchased some goods from B. Hamilton and are returning them. So these are persons who we purchased goods from and we're now returning to them. B. Hamilton, September 11, 2005, $180. Like we purchased we are returning $180 amount of goods to him. On September 16, we have returned goods valuing $100 to B Rose. On the 20th of September, we have returned goods valuing $30 to C Blake. And on the 30th of September, we have returned goods valuing $360 to S Saunders. That's how this would read. Now and then transfer to returns orders account the total. Remember now that PL29 means that is page 29 of the purchases ledger, and we have recorded the business has recorded on page 7 of the returns outwards journal. Now our first one that we will post to the purchase ledger is B Hamilton. Let's go. So as you can see, purchase ledger, and we're going to write B Hamilton down here. Then what we do now, we're going to make a what kind of entry? We're going to make a debit entry, because the rule says what? That you must debit the amounts of debit notes one by one to the accounts of the suppliers in the purchase ledger. So therefore we must make a debit entry in the accounts of the suppliers in the purchase ledger, and this is B Hamilton's account, right? Now the debit, the year is 2005, and it is September 11. And please note also that they are working from page 29, and that page 29 comes from this page 29, yes, and the amount is what? 180. So question, what do we write in this section? Returns outwards. We would type returns outwards right there. What on the folder column? We write RO7, because this is coming from page 7 of the returns journal. This folder is like a reference number. So we can refer back to returns outwards journal, page 7 of the returns outwards journal. That's what this is basically saying. The next person is who? Mr. B Rose, September 16. So we'll do the same thing that we did to B Hamilton. B Rose, the date is 2005. The amount column as well. September 16. Returns outwards. And the amount full number is at RO7, and the page number is P46. Coming from this, my friends, coming from this one, B Rose, page 46 of the purchases ledger, the amount is $100. $100. Now next person is Mr. Who? Mr. C. Blake. I would have hoped that you would have written down that journal before you started to go, before you went any further in watching this video. So now I'll ask you to pause the video at this time. If you have not written it down, pause the video, write it down. Pause the video clip, write down this information. Pause it, write it down, everything. Thank you very much. Now we are on to C. Blake, September 28. C. Blake, page 55 of the purchase ledger, $30. Now we're going to enter under C. Blake. It's 2005, September 28. Returns outwards, RO7, and then the amount, it is what? the amount is $30, right? Yes. Next person is who? Is Sanders. Sorry, the page number for Mr. C. Blake is page what? Page 55 of the purchases ledger. So that is P55. And Sanders is page what? Page 87 of the purchase ledger. 2005. Alright, September what? September 30. Returns outwards. RO7. And the amount is $360. Now we go to the general ledger and open the what? Returns outwards account. The rule said that what? We must what? At the end of the period, the total of the returns outwards journal is posted to the credit of the returns outwards account. So this total right here will be transferred to page 116 of the general ledger. Total right there will be transferred to page 116 of the general ledger. No, so P 116 2005 September what? 30. Returns for the month. What do you say again? No mistake that there. Transfer to the what? The credit of the returns outwards account. So on the credit side we're going to write that September 30 returns for the month. RO7, and the amount is $670. So there you have it for the returns outwards journal and posting the returns outwards account. There you have it for that one, my friends. Hope bunch that you have learned from this video clip. Please now apply it by doing your worksheets. Now friends, I'm going to show you how to post these items as regarding in the different returns journals to the different ledgers. First, let's look at how to post to the sales ledger. So do you remember that we post returns from returns inwards journal to the what? Sales ledger. First one is C. Spencer. We're going to credit C. Spencer's account with $14 under the sales ledger. First one is Mr. C. Spencer. The credit his account with 2011. So, May what? May 20 for C. Spencer. May 20, right? May 20. And then we write returns inwards. And then what this will be the amount now. The amount is somewhat tricky. No. The amount is $14. So the amount is $14, my friends. Next one from returns inwards one, Mr. I think it's N Mendes. No, shoot, N Mendes. Sorry about that. Mr. N Mendes. And the amount is $24. May 28 N Mendes. The 2011 May 28. The amount is what? $24. That's the amount. That is for N Mendes, right? No, we're gonna have something. Purchase ledger right now. That would be it from N Mendes. What about that thing? The other thing that we should do is the transfer to the total to the returns inwards account or the general ledger, right? Yep. So now we have returns inwards account, returns inwards account. I'm going to post the debit of returns inwards account, right? Yes. That would be 2011 May 30. And the details would be what? Returns for the month, right? And then the amount would be $38, right? Yes, that's the amount. Now we go to our other one, which is our purchases ledger. Remember we post from returns outwards to our purchases ledger, right friends? Yes, we do that. So now we're gonna have P pattern. We're gonna do two of these. We're going to do two plus the general ledger one. We're gonna do P Potter and B Spencer. So we're gonna have under purchases, we're gonna have P Potter and the amount is what? Alright, the amount is amount is 12, Spencer 22, 2011 May 11, $12. Yeah, the amount is 12. Yes friends, the amount is 12. Yeah, what are we going to do with the debit, right? 2011 debit, so May 11, amount is 12. Right, that returns outwards. So that's how this one is done, my friends. Next one is what? B Spencer, right? B Spencer, and this till May 11. We're gonna do another entry. We're gonna make another credit entry. It will be May 11 again. Alright, returns outwards, and the amount is $22. Then after which we're going to go to our general ledger and type write up our returns outwards account. transferred to the returns outright account. We transfer what? $64 to the return outright account under the general ledger. So we want to write what? We want to write the return orders are ready. So we want to do what? To do what? We make a credit entry, my friends. 2011 May 30 again. Alright, returns for the month. Alright, returns for the month. And the amount is a grand total of $64. That's how you post from your journal to your ledgers, my friends. Hope you would have written down every step of the way. You know you'll be asked to do your worksheet. Thank you very much and have a wonderful day as well, my friends. We go along. Now that you have watched that video presentation, you're now asked to do your worksheet. Please complete them in the most perfect manner. If needs be, go back to the video, see what was done in particular situations, and may God continue to bless you richly.